Hey everybody, I'm Joe Killinger. I'm a real estate investor and entrepreneur, and we put these videos together every week to give you all the tips and insights from my experience over the last several years. So make sure you tune in and subscribe, and thank you. Everybody, thank you for tuning in. Today I've got a very special guest. We have a lot of people asking about industrial property around California, Southern California. So I reached out to a friend of mine, Anthony. Anthony was kind enough to agree to come on today. So Anthony, thank you for coming on today.
Thank you so much for having me, Joe. It's an honor to be with you on your show.
Yeah, I appreciate it. Why don't you give us a little background on yourself and your company?
Sure. Okay, so hello, everybody. Hello, listeners of Joe's show. Our company, Major Properties, has been in the LA marketplace for over 50 years. We specialize representing property owners, buyers, and tenants of commercial industrial property. I'm a partner with the firm, and I have been here in the LA market for over 18 years. Helping industrial buyers, investors, and developers of these type of properties.
You got a little experience in this, huh?
Few years under my belt, a few storms I've been through.
You've been through, this is about your third downturn, isn't it?
Yeah, well, it's probably the second biggest. 08, 09 was a bloodbath, and that was a really, really scary time. Learned a lot, stuck it out. You know, we saw a lot of people leave the industry at the time. Yep. And, you know, it took a few years, a number of years to kind of get back. But I think if you made it through 08, 09 and you can make it through this, you'll be okay.
What do you think as far as coming back with industrial? I don't think industrial's seen as big a dip, have they?
So we've been pretty lucky. Out of the real estate food groups, industrial has been holding up, one of the best, one of the strongest. Multifamily has been okay, kind of relatively flat, but they do have a lot of tenant issues. But industrial is maintaining. Joe, we were pre-COVID, the industrial market was super, super hot. We were running at about, so we want to talk about kind of LA County, Orange County.
Yeah, let's start there.
Start there. So we were running between the two counties, probably 3.5%, maybe 4% vacancy combo of the two. There's been a huge demand. So going into pre-COVID, our prices were at a peak. Inventory was very, very tight, very, very low. It was definitely hard for investors and certainly even hard for the owner users to buy property. But the market's still strong, and there's been a lot. We didn't really take a big dip during COVID. In fact, I closed several deals in the middle of COVID, all industrial deals, one investor deal, a couple owner user deals. So they were still very bullish on industrial market because they know once we get past COVID, the demand is going to be there. Our vacancy really hasn't dropped that much. It's still fairly low, and it's putting a lot of pressure out there. So with a 3% vacancy factor, you know, you're not talking about a lot of inventory, and the inventory that is available, it's usually, you know, sort of the low pickings of the industrial world, sort of older, junky, more obsolete buildings. And that's the stuff that's really available. So when you break that down, there's just not a lot of great choices right now.
Are you seeing construction starting on industrial?
So we're seeing a little construction coming up. I think in LA County, there's maybe a little over 2.5 million square feet that's going to be built. I'm working on a deal right now in Huntington Park on a 3.5 acre site, and the buyer's looking to tear this old building down and put up brand new state-of-the-art industrial warehouse. Land obviously is very hard to find. Land prices have gone up. The cost of construction has gone up. So the demand is there to build, but the cost for all of these goods has gone up. And the land is a big one. Industrial land used to be so cheap, but because it's becoming so rare these days, especially in the tighter submarkets, Joe, like
Sure.
if you're in LA, closer to the ports, throughout the big corridors, the land is really cheap. If you're going a lot further out to the Inland Empire and in Redlands and San Bernardino, industrial land is going to be a little bit more, probably better priced, but you're much farther from the core and the ports.
Yeah. Now, how about,
right? So it depends.
go ahead.
No, I was going to say, I mean, it really depends on, like, if you want to build a 500,000 square feet, 1,000,000 square feet, you of course are going to go out to the Inland Empire and San Bernardino, and that's where they're building the massive distribution centers. But there's still a demand to be closer to the urban environments and closer to parts of the San Fernando Valley, closer to the ports. And that land is rare and it's very costly today.
I'm sure it is. Who are you seeing? Who are the tenants that are out there looking right now to lease or to purchase? Mostly e-commerce or?
So I'll tell you, I'm trying to think about the couple of deals we just did. So there's definitely the e-commerce is picking up. I mean, anybody that has anything to sell today, you have to enhance your e-commerce business. And so that's a big one. The logistics stuff, those guys are going way further out to the Inland Empire. We don't really get involved too much from that realm, but closer in here, I mean, we're still actually, Joe, manufacturing's coming back too. Manufacturing had left our country for a long time, and things are starting to come back slowly. And so we're starting to see a teeny uptick in garment manufacturing here. And we work a lot in the apparel industry in the greater LA area. So we're seeing that. We're seeing wholesale, and we're seeing, especially in the urban infill areas where we have industrial, ghost kitchens, cloud kitchens, food delivery services, converting a lot of these old warehouses into some sort of kitchen for food delivery.
So you really think industrial is probably, if anything, going to get tighter the way it sounds? I mean, 2 million square feet, that'll probably get absorbed fairly quickly.
It's not a lot considering the size of our state and considering the amount of people we have here. And, look, I think a lot of people, the area that I focus in, the greater LA area, I'd say that market's even tighter. We're probably down to 2% vacancy, which is really nothing. And then, in the inner core, they're not building a lot right now. So I don't know, Joe, I think there's a lot of pressure out there. Debt is cheap. So people that can afford to buy, the owner users are buying. They're still willing to pay a premium. And we haven't seen a lot of decline in our market for our food group. Maybe 5%, 10% has come down because of COVID, but it's starting to tick back up already.
Yeah, it's going to come back pretty fast. Number of listings, are you seeing how many listings do you know of that are in the LA market? Is it super tight, or people are putting on high prices and hoping that somebody will pay it, or?
Yeah, I mean, there's not a tremendous amount right now.
Yeah, I would think.
And I think, like I said, I mean, prices have only adjusted maybe 5 or 10%. So when things do go on, a lot of owners are really holding out with pre-COVID prices, and the ones that are making the adjustments are getting the deals done. But there's not a lot of reason for these owners to put down the price because of the inventory being so cheap, the debt being so cheap, and the interest in industrial properties, because people know it's a pretty safe area to invest in commercial real estate, whether you're an investor or owner user. And the problem with the investors have is the owner users are willing to pay the premium.
Sure.
They can get their loans, as you know, Joe, with the SBA. They can come in at 10%. And the underwriting is definitely a little bit tougher right now, but they could afford to pay those premiums where an investor is having a little tougher time today. And cap rates are really low. There's a lot of pressure on industrial investment right now. I think in the LA area, LA County, right? So it's a pretty big county. You're talking maybe 4.5%. Ventura County, you're probably a little better, maybe 5.5%. But the appreciation for this real estate is always going to be better, in my experience, in LA, closer to the urban areas, closer to the ports, closer to the major freeways. And here in the greater LA area, I mean, you know, we're talking, we have all the major freeways within minutes of each other to connect. So if you're along these big corridors, which are big truck routes, that's super important for these people.
Yeah. What do you see happening with lease rates? You think they're going to, once we kind of get through this, they're going to take off again?
I think there was deals to get done in the middle of the COVID. I did an industrial lease deal it was about a 50,000 foot building in Vernon. And just to give you some perspective, pre-COVID, that was probably 85 cents a square foot industrial gross. In the heart of COVID, over the spring, we cut a deal at 65 cents. Oh. So pretty significant drop. But look, there was a lot of fear. Tenants didn't know if they were how business was going to go, how long the county was going to be shut down. So owners were smart. You had to cut deals. You had to drop the leasing prices if you wanted to get a tenant in. You had to work with these people. So smart ownerships did that, and they got the security of having the cash flow back. So I think rates are going to start to go up probably after the new year, probably in January. We'll see what happens with the elections. But with the low inventory, I think industrial prices are going to we're going to see it start to tick up, probably around 90 cents, $1 a square foot, depending on the specs of the building.
In other words, it's really, if I want to lease, I better be getting hold of you very soon, huh?
Call me now. Yes.
Exactly.
Yeah, no, you got to start early. I mean, I have a client that's in the car business, and we've been looking for 4 months down in the Inglewood Hawthorne area. And, there's nothing that's come up. So, yeah, you got to start early with this stuff, because when stuff does come up, you got to be ready to strike, because you don't have a lot of choices.
It's good news that we're getting manufacturing back in the country, I guess. So that's a plus. But well, Anthony, thank you very much. So much information. And everybody, just so you know, I'm going to put Anthony's contact information in the video, down below the video. And if you like it, please do subscribe to our channel. And we put these videos out every week. Anthony, thank you very much for coming on today.
Thank you, Joe. It was my pleasure. A lot of fun. Good luck with the show, and look forward to seeing more episodes. And then I think you're doing great work here and putting out really good content for the marketplace. So keep it up.
Thanks to guys like you, we're able to do so. So thank you very much.
Thanks, Joe.